The next question that we asked ChatGPT is, I want to retire in 10 years. How do I know if I have enough money? Which might be something that, when people are coming to you, they're saying, hey, this is when I want to retire. This is what I've got. Am I in a good spot for this or not? I think that, based upon my limited experience with financial advisors, most people think they don't have.
Do you need one, by the way? I mean,
we'll get to that. I'm sure that people watching this might need one based upon how inaccurate some of these things have been based upon its responses. But I think that one of the things that intimidates people working with the financial advisors, they're not sure if they have enough money. So that I think this was irrelevant. And the reason that we asked this is because we could see from a layman's terms, they're not sure if they have enough to work with somebody. Whereas I guess the general consensus would be, oh, I need at least, insert amount here before I talk to a financial advisor. So getting back on topic, we asked it, basically, I want to retire in 10 years. How do I know if I have enough money? ChatGPT responded with, to determine whether you have enough money to retire in 10 years, you'll need to perform a retirement income analysis. This involves assessing your projected retirement expenses and comparing them to your expected sources of retirement income, such as Social Security, pensions, and retirement savings. You'll need to take into account factors such as inflation, taxes, and potential investment returns. A financial advisor can help you perform this analysis and develop a comprehensive retirement plan that aligns with your goals and risk tolerance. So, your thoughts?
Yeah, I mean, this could have been stolen from any financial advisor's website, and
is this like black and white, cut and paste?
Yeah. I mean, a retirement income analysis is a very specific term that, unless you are in this financial advising space, it might not be words uttered by anybody else. So for ChatGPT to know that that's the lingo that we might use, very impressive. Knowing that there's different kinds of resources, and more specifically, and I don't know if this is a ChatGPT function, that these are kind of U.S. specific. Because it's saying Social
Interesting
Security.
point, yeah.
Social Security. I mean, there might be that term or the equivalent, like in Canada, for example, or in the UK. There might be an equivalent program, but it's not called specifically Social Security. So it's making a pretty nuanced decision to say, hey, we're going to talk about the United States here.
Well, and that goes back to what you were talking about before when you were talking like emerging markets that are international. So it doesn't seem like based upon this, it's taking those into account in terms of like investment strategies.
Correct. Yeah. And to the comments that you're making, like talking about, how do I know if I have enough money? One of the things that we need to do better as a profession for financial advisors is working with the folks that need the most help. And it's not always, to paint with a very wide brush, those that are graying, so to speak, that have the dollars that can then facilitate the payments that make a relationship work between a financial advisor who can then provide you with advice. I mean, there's whole swaths of people that don't fit that demographic that really need help. Most of my friends are of childbearing age, paying off student debt, dealing with daycare expenses, trying to grow their income and their careers, maybe growing their businesses. That's the support that these individuals need. And so thinking about, this particular group, about, setting themselves up for retirement, you might be talking to somebody who's in their 50s. Maybe they raised their kids, paid off their debts, and now they're finally able to save for retirement. They finally feel empowered to do so.
And based upon that too, do you feel like that's within your profession, do you see a lot more people that are working with older people, or would your advice be to, hey, you need to start doing this at like 30?
Oh, yeah. And again, this is a problem with the profession, is that, the way that most financial advisors, and again, we're pulling the curtain back a little bit. Most advisors get paid on what's known as assets under management, or AUM. And AUM is just referring to how much money do you have with me that pays me some kind of ongoing fee, whether it's a commission, whether it's an advisory fee, whatever it is. The challenge is that people that are in their 30s, generally, unless they have built some kind of crazy business,
have less income.
They have less income. They don't have the assets. And so they are going to be hindered by the fact that they don't have money. And many financial advisors will say, you don't reach my minimum. I'm so sorry.
Which we've seen on other sites where we look at, they always have, hey, you have to have at least $1 million in this, bunch of real estate, et cetera, before they'll even touch it.
Right. And so a better way to think about working with an advisor is whether or not you have the complexity in your situation that you think might require professional help. And so that's going to be very amorphous and very subjective to the individual as to whether or not it's appropriate. But
which is way beyond ChatGPT's level of expertise.
Don't rely on ChatGPT to tell you that.
But, hey, I'm 30. Write my retirement plan.
Yeah, I mean, if you're a single guy, living in your parents' basement, you make $100,000 a year, you're spending $10K a year, and it's mostly on Cheetos or something like that, then cool. Like you don't have the complexity probably that a financial advisor can
Eliminate
provide a lot of.
Cheetos and you'll save money.
Yeah, right.
Got it.
That's all I can do.
Yeah.
I'll see you next year.
Yeah.
But if you're in your 30s or 40s, you've got kids. Maybe they're in the house. Maybe they're slowly exiting the house. Maybe you are trying to build up your wealth in different ways. Maybe you've got your 401k going and running smoothly, but maybe you're trying to find is there a better optimized manner? Whether it's from tax diversification, investment diversification, whatever you might be interested in. What are some of the things that I should be doing outside of investing? Like, should I pay off my student loans first? Hope that they get forgiven.
Yeah.
What do I go towards? And so that kind of complexity is actually where financial advisors provide the most value. And there's different ways of, there's different models of compensation where you can work with a financial advisor that doesn't require you to have a whole bunch of money. Because a question like this that ChatGPT is attempting to answer, they're not even approaching this part, but we as advisors are trying to figure out, okay, is there a reason that I should work with you without you paying so much money that I'm not going to be able to provide as much value?
Well, I have a question.
Or you're just going to be a gray-haired individual that is approaching retirement and you've got the money that I can be compensated.
Well, I have a question too. Is there a set fee? So for example, if someone says, I've only got, 50K or 100K to invest, is that even worthwhile approaching due to like the fee structure? Does the fee structure, I guess what my question is, does the fee structure change? Whereas like if you have $1 million in assets, let's call it, to keep the conversation simple, versus if you have 100,000, is it, okay, I'm going to charge this person more so they're less inclined or incentivized to use a financial advisor versus $1 million? It's like, well, my fee structure is lower because there's more invested, so to speak.
Yeah, and that's where robo advisors, considering we're talking about AI here, come into play because they can offer those kinds of services for those that might be building up their wealth as opposed that are maybe more prepared to work with a physical human advisor at that point. So because you're right, some have a sliding scale to say, hey, if you are an individual that don't meet this particular minimum, we'll have break points. Or maybe if you have a little bit more money with us, we'll lower your fee, but to get started with us, you're going to have a much larger cost. And some advisors,
because there's more effort involved in managing that many assets.
Well, right, and you're still, from a technology perspective, like what we use in our office, the cost is spread out amongst everybody, but you're only paying me a little bit because you only have a little bit of money in me, but John over here has tons of money with me, and so he's actually footing maybe a slightly larger portion of that.
So it's like tax system.
Yeah, so I'm sure you can relate.
Yeah.
So that's the challenge there, and I know we're a little bit off topic from what this is talking about, but this is digging more into we don't want people to wait for 10 being 10 years out. We want people to better prepare themselves, and these kinds of things that they're talking about in here are all important. But we should be doing this work way earlier than 10 years out. But unfortunately, that's where most of the people are searching for retirement, financial planning, is when they are much closer to retirement than probably when they could have done some earlier work and really set themselves up for success.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. As always, please remember, investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional. Correct Capital Wealth Management is a registered investment advisor. Advisory services are only offered to clients or prospective clients where Correct Capital Wealth Management and its representatives are properly licensed or exempt from licensure. No advice may be rendered by Correct Capital Wealth Management unless a client service agreement is in place.